Hey, it's Mac with PriceActionTradingSystem.com, and it is Thursday. It's September 28th. This will be our chart lesson for the day, and this will wrap up our week. No chart lessons on Fridays. Quick look at our daily chart here before we flip over to our 2000 tick chart. We talked about yesterday how we were oversold and rallied here, and how this looked somewhat like a capitulation day. Well, we did get some follow through buying today. We did close off the highs, but a lot of mixed trading in there today too, as well. So kind of an odd day, even though there was some very bullish moves at times. It wasn't always the easiest to get in on that move. So we'll see that when we flip over. But yeah, I'd call this a um, mostly well, it was we closed up a good bit and we closed. Although we did close off the highs, I would just call this a bullish day that closed off the highs. There were some news items today you had to be aware of, so um, there was a couple of spots in there you couldn't trade. I don't really pay any attention to these speakers around that happen like around 3 o'clock. It's not that they couldn't affect the market, but we shouldn't be trading after 3 p.m. Central Time anyway, so I don't pay any attention to those. So all we really had was the 7:30 news item. So be flat by I'd say you probably don't trade till after the news. But if you were here at 7, there was a perfect setup, you probably could take it. Uh, but I would get out. I'd be out before that 7:30 news item came out, and I wouldn't enter anything new after 7:15 or so. But anyway, let's flip over to the 2000 tick intraday chart, and we'll take a look at it, and we'll go through the trades, and we'll wrap up this day and wrap up this week. Okay, here's our 2000 tick chart, and you can see most of the morning, really till about 10:30, we were in this lower half of the trading range, and then we finally broke out and pushed higher. We actually traded very strongly to the high side. Went more than a measured move. That's what this blue line is. It's a measured move based on the width of this blue channel. So it'd be an equal width. We blew right on through that, but you can see we got back inside and closed inside that. So this was a temporary breakout. And that's how kind of the day looked. There was we were mostly jumping up and down here, really mixed. And then we trended well here, but you can see we still had some mixed trading in there along the way up. Um, and then we trended down again with a lot of mixed trading. We did get a break here, moved to a new low, and then we just kind of chopped around till the close. We just closed a few minutes ago. It's just a few minutes after 4 o'clock. So that's how I saw it personally. But let's zoom in here and we'll go through this and talk about the trades. Again, there's not a lot of trades today for such a high volatility and high volume because it's just mixed trading really. But 7 o'clock came as we're trending up through here. And so there really wasn't a chance to enter this prior to the news. So just wait for after that. Really by, what time is that there? Really by 7:35. 7:37. I mean, the news had settled down. This is a really big bar. This bar's got 20 ticks. So, um, but if prices break lower, you may want to go with it. What you might do is let prices break lower and drop a limit order, maybe a few 5 or 6 ticks back, and just see if you could get filled and get a little safer feel. Now, don't let it run down here and bounce and come back. But if it breaks lower temporarily and comes back and then comes back down, that's what you're kind of hoping for there. It's just a big bar. I mean, you can still take that trade. There's still plenty of room back, but it's a risky trade because it's 20 ticks, and if you're wrong, you're going to take a big hit. So you do have three bar matching eye. It's actually a 2 bar matching eye because this one's a tick shorter, but that's close enough to call that 3 attempts to go higher after a break and a new high. So the odds are we're probably going to trend lower. Now you don't know if it's just the bottom's just going to fall out and it's going to run straight back down again, but that's what it did. So if you caught that trade, you probably had a good trade there. And of course, we're coming down. We get a close outside, move to a new low, and it bounces a little bit higher this time than previous. Um, Nice signal bar. So that's a second entry long. I didn't mark it because it made a new low compared to that one. It's not really a new low here. I just think you're better off to wait on a higher low. You could argue for that to be an aggressive trade and maybe take it, but I think you're better off to wait. And you just never really get anything else. In fact, you suddenly get a first entry, second entry with a big bearish bar here, and that's two legs up as well. You can see you got a leg up, a correction, second leg up, and there's actually two legs in that second leg. So that's a second entry long short as well, because that's a double bottom. So first entry, second entry, you could go short right there on the second entry short. I don't know that you can get in that trade because it gaps over, so you had to get your trade in there just right, or you may not have got filled on that one. But it turns out to be a pretty good move down. Then we're just bouncing along. This one's tempting, but it's by the time this closes, that looks like congestion. But then we break lower on a failed breakout and end with a nice reversal doji type bar. Long way away from the EMA. You're better off to wait on that higher low, but at the same time, these failed break lowers that make a new low like that are often very important lows, price points. A lot of times they'll be the low of the day if it'll break out to the low side, or if it breaks out to the high side, it might be the high of the day. So a lot of times they're worth the risk. Here you would have gotten paid off, but it didn't take off. It wasn't a reversal. So prices weren't done yet. So, but that's why they're risky, because they don't always do what we think they're going to do, but when they do, they work really well. You might try to argue there's a failed second entry short there, but that just looks a little congested to me. And we've already had a close outside and a new high all in one bar, so I'm wary of entering short. You definitely don't want to enter short, but I'm wary of treating that like a reversal. We've been chopping along sideways here for quite a bit. But it runs up. You just get a first entry and it drops back down. Here you get two legs back, but we do make a lower high. It still looks kind of like two legs back. It is a double top. This is one that you might say, hey, okay, look at that bearish bar. It looks like two legs back. So that could be two legs of correction. Now I may get a measured leg. So I'm probably going to take that trade. And then if you look at your measured legs, lo and behold, we almost had a perfect measured move. And then it bounces. So so there's some reasons. Actually, I didn't mean to mark that red. I meant to mark it green. So if you saw that and understood it, maybe you take that as a second entry short, two legs back, looking for that measured move. And then of course we get a failed breakout, but no setup bar. Doesn't go very far, and then it turns lower again, and then finally it comes out of there. We make a higher low and it comes out. But this is your signal bar. You can't really use that for your signal bar, so no entry there. Again, it looks like a first entry, second entry. And this does break lower and turn up. To me, it looks really sideways. If you wait for this to close, you can't take it. But if you enter it on the engulfing bar, maybe you take that trade. And then we make another leg up. We just kind of work sideways. And there's another first entry, second entry right there. But you've already had a close outside, and the high is not very far up. And so there's a good chance you could get burned there. I think you got to skip that. In fact, I probably should have drawn the range on that one just so everybody can see it. Yeah, you can see, hopefully you can see why I didn't take that trade. But it does run on up. You get two legs up, and then you get a second entry short. Nice signal bar. I like going short there. It is green because we made a new high, and you might want to wait on a lower high, which comes here, and the signal bar is no good. No real reversal sets up on this. We break a little lower, finally rally back, and just kind of go sideways before we break lower again. Then we turn higher here. You would look for a break that comes out in here, maybe back to the EMA, and then comes back and makes a new low. you can see that doesn't happen till way over here before that really happens. So anyway, I don't see an entry there. Maybe take the second entry here. So again, it's a big bar. First entry, second entry. Turns out to be a great move, and we pretty much would be looking for prices to come lower because we've been working higher here. Runs down. We just talked about that trade right there, the second entry. It just looks like one leg up to me. However, you can see the first entry, second entry, and we traded so far up here. The odds are good, really good, that it comes back again, at least to test this low. I didn't draw the trend line, but there is a trend line down through here. But there you can see that channel. That's the first break, so there's a good chance it's going to retest these lows. And by the counts, it is the second entry. Of course, it runs down, tests the new low, runs up, congestion, runs up, first entry, second entry, nice signal bar there. This just looks like one leg back, and that's why I marked that green. It's not the greatest setup, so I did mark it green. Ends up taking off. Then we're working sideways again. I think people are just duking it out here, you know, trying to figure out, are we going long, are we going short? I think we're right at the crossroads of something. We're a little bit oversold, and people are bottom fishing and trying to run this thing higher, and they're really struggling. So you just have to be careful here of getting long or short right here, because it's hard when we start working sideways like this. It looks like we do make a new high here, but it makes a higher price point too. So I really like to wait on the lower high. So for that reason, I marked it green. But we just keep chopping across here, and I don't see anything. We break out. This one's like 4 ticks, but it's just so neutral. And we did make a new high, so you'd be better off waiting on a lower high, and we just never really get that opportunity. This thing does end up breaking out. There's a little trap right here, and it's right off that key entry point. But and it does close outside where we've been turning down, but this was the original range, and it acts as resistance again. I want to see that thing tested a couple of times in most cases, or get a good trend going. So I just don't think you can really enter right here, even though it is off the key entry point. I just think you got to wait on that one. Now, it was an engulfing bar, but there's not much room up here, even on the engulfing bar, so I'd skip that trade. And it just takes off and runs up. We come back to the key entry point here, this secondary one, and come off of it, but it's just a first entry. And this thing's not really looking that strong yet, so really you got to wait. So even though this is off the EMA and the midline there, I just don't think you can take that out of that congestion, because there's too big a chance it snaps back and comes back down and breaks out the other side, or comes back down to this trend line. You don't really have this yellowish looking one in here yet, because you just drew it off the first 2 swings. It doesn't get confirmed over here, and then you get a break pretty quickly afterwards. So you just can't take that trade. But this runs on up, and then we're just working sideways, too congested. Then we got a break. You're coming back. Unfortunately, by the time it gets back down here to this yellow trend line, there's no setup. It's all congested. So I mark this as a maybe, because you have this trend line and this trend line, and you do have a break here and multiple little swings down. But again, it's congested, so it could break out. See how it breaks out and it fails temporarily? It could just turn and keep going lower. So it's a little It's a little risky. I marked it green, but I think you should wait. And then we run on up, and there's just no entries here. Finally, you turn down, and you bounce off the original. You got what looks like a close outside. I think my trend line's off again here a little bit. This blue trend line should be a tad tighter, like so. It should be touching right there. You can see it goes right off those bodies now, and that looks better. But you get this close outside, and you've had a couple of legs up. You don't want to be going short yet without a really good setup, and I don't see anything there that I'd want to go short on. There's a lower high here, but it's just a first entry. The signal bar is too bullish anyway, and you quickly get two legs down. So this would be a second entry long right here. Technically, it's not, because this is a new high, and this is not. So really, this is a first entry, second entry, third entry. All the same, it still looks like two measured legs down. So maybe you consider this move to be down. I mean, we're a long way away from the EMA, but what I recommend is waiting on the higher low, and that's right here. I don't think you can enter this on the engulfing. You got to wait for it to close, and then it's bullish. So if you get a break above there, take it. And of course, it breaks above it. It looks like it's going to fail, but it ends up going higher. So you would have got your scalp out of it. But then it looks like two legs up to the key entry point, and that's the first real for sure close outside, convincing close out. I mean, maybe you get a close outside here, but that's not convincing. This one would be convincing, and so that's your first convincing close outside. You're not back down to the well, you really don't know where the low side is on here. You might have had it right there at that point. Actually, I think that's where it is, right across there, and these were little overshoots. But I treated that like two legs back with a big bearish bar, and I liked going short there because you're probably going to retest this low. Then it looks like we're going to rally out of there, and you get a two-legged correction, which oftentimes leads to a measured move to the upside. But guess what? You can't get through this resistance, and you end up with a triple test with a really bearish bar there. I like going short there. And it takes it a minute, but it drops on down. And maybe this is an overshoot, maybe it's not. It's really hard to say. I think I was playing it like that. I think the midline fits pretty good right there. You can see that it tends to be fitting rather well there. So I think maybe that's not an overshoot. It's hard to say. But anyway, you're moving across here. I don't think you want to go long yet. It's too congested and just sideways. A lot of these closes are below the EMA, and then suddenly you get a triple test right at the midline. I like, as long as there's room to get out before that midline on this little tight range, I think you could take that trade. At least consider it. And it is exactly 6 ticks, and then it bounces. And that's why we go for 4. You need 6 ticks the way we enter and exit to get a for sure 4 ticks. So that's what you got to have to scalp out of a trade with 4 tick scalp. And that's exactly what we got. 6 ticks of movement, and then we bounce, and off it goes back to the upside. I think it's too early to enter here. But then you try to come back once, twice more, and turn down right off that key entry point again. And that pretty much, you confirmed it here, and this pretty much just further confirms it. And you got a double top now. I like going short right there. There's a lower high here, but you don't want to enter on that engulfing bar. Not into the EMA like that. If it didn't take off straight on through here, then you had to be concerned. So I wouldn't enter on that one. Even though it works, don't enter on it. And then you quickly get 2 legs back here, but your signal bar is no good. Then you get a couple of legs back here, and it bounces and takes off. And I mean, none of these lows here, you're making lower lows each time and lower highs here as well. Um, this one does break lower first and fail and turn up, and if it goes out that other side, um, you probably got them trapped. It just looks too congested though. And you see this next bar ends up inside, it even looks further congested by then. So I think you have to wait till this bar closes, and when nothing breaks above it, there's no entry, and you just don't get a chance to enter that. It just rockets up straight up, and that takes us into 230. So it's just one of those days where it's very mixed trading. Now on range days where the highs, every time it reaches these highs, it turns down, and every time it reaches these lows, it turns up. It gives you a good signal bar. Those are easy range days. But days like this are not easy range days at all. We're turning at weird different places with a lot of congestion mixed in. Then we break out with no retest at all. So you really don't get a chance to enter this. Here's where we came back and retested it. And we quickly shot right back up again, only to see it sell off again. So it's just, my guess is that's what this whole pullback was. We were coming back to test that. And you got to remember that. So when we start working lower, that's your target. And so always keep that in mind, where the target is and what prices are trying to do. But once they met that, they were rocketing up again. And then 230, boom, the bottom falls out again. So maybe that's people exiting before the pile speaks. I don't know. But that's right before he comes out, shortly before he comes out to speak. So it's probably just people taking their profits and exiting before this news item. I don't pay a whole lot of attention to that one because we stopped trading at 2:30. Don't take any new trades, and it's not till 3 anyway. And even when this guy is going to speak, it's usually at some kind of function or a luncheon. A lot of times they're luncheons, and they'll speak and whatever, and you don't know, and they may say something, they may not, but even if they do say something that would affect the market, you don't know what time it's going to be said. So these don't tend to affect the market like the 1 p.m. FOMC news does, but doesn't mean that he won't say something at some point that the market might catch and react to. So always be aware of it, but it's a lot harder to be out during this news item than it is the rest of them. So anyway, that's how I saw it today, and I'm going to wrap it up. This is going to wrap up our week. We'll be back again to do it Monday. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.